We're also expecting the pound to depreciate further from here, so we're looking for quite a substantial depreciation. Tim Davis, Fathom Financial Consulting. Donald Trump was sworn in as the 45th President of the United States on Friday, with the lowest approval rating of any new president before him. During his speech, Trump focused on protectionist talks instead of details on economic stimulus, which saw the US dollar fall. Where do you see the greenback going in the first year of his term?
So we actually think that the dollar is going to appreciate quite substantially over the next 12 months and indeed over the next 2 years. Although we do think that protectionist talk will continue for some time, our main focus is on the decoupling between the US economy and other developed economies and emerging economies around the world. We think that the US, due to Trump's policies of kind of increased infrastructure spending and increased focus on domestic growth, are going to further stimulate the US economy. And we're looking for inflation to pick up and growth to pick up in the US quite substantially. As part of this process, we'll expect to see markets start to price in further expectations of interest rate hikes from the Federal Reserve, and this should drive the dollar higher. Against this backdrop, we're not expecting the growth to translate around the world to anywhere near the same extent, so we are expecting the US economy to decouple from the world. So it will be a time when the Fed's raising interest rates, but other developed markets in particular aren't. And this will be one of the main reasons that the US dollar rises this year.
UK GDP growth for the fourth quarter of 2016 is forecast to decrease to 0.4% from 0.6% in Q3. Firstly, what do you believe the preliminary data will show on Thursday? And secondly, do you think this decrease is a sign of things to come with Brexit negotiations to commence in March, or just a seasonal trend?
We're expecting growth for Q4 in the UK to be 0.5% quarter on quarter, which is showing a strong but an unbalanced growth in that quarter. We expect, though, that as Brexit starts to weigh more on the economy throughout the rest of this current year, 2017, that we are going to see kind of further slowing of consumption and investment as the negotiations start to become more protracted and get very tense. So we're only expecting GDP for the UK to grow by 0.9% for the whole of the year of 2017. So quite a deceleration there. In terms of how this feeds into markets, we're also expecting the pound to depreciate further from here. So we're looking for quite a substantial depreciation of the pound, and we're looking for cable to fall to 113 by the end of this year and 105 by the end of next year.
Germany's IFO Business Climate Index is expected to slightly increase by 0.02% in January. This year ahead, we have not only Germany's federal election, but several throughout Europe, coupled with Brexit negotiations expected to begin in March and Donald Trump's presidency. How do you see this impacting the index and overall confidence?
So we're expecting the German IFO Business Climate Survey to show a slight uptick in January in line with consensus. The recent positive data out of Germany continues to reaffirm our view that the euro area's largest economy will continue to outperform other economies within the euro area. We're forecasting the German economy to expand by 1.6% this year. In terms of the political backdrop, we don't expect kind of too much of a increase in kind of populist party support in Germany, so we're still expecting kind of the mainstream parties to do very well in the elections there. Across Europe, we're not expecting Marine Le Pen to win the French elections, although there are expected to be kind of market movements. We wouldn't say it's a completely riskless event. There's definitely a chance that Le Pen does do well in the elections, but it's not really in our base case. In terms of the impact on asset classes, we're expecting the euro to fall this year and next year in both our central and our risk scenarios. But over the long term, the euro area economy is pretty structurally weak in our view. So we're expecting kind of a long-term trends in euro growth to stay pretty low.
Thank you for sharing your insight with us today, Tim. So that's what's to look out for in the week ahead. But if you want more FX news, then don't go anywhere.